Can't believe it. Was that amazing? That's amazing. Amazing earnings report. Amazing earnings call. Let's talk about it. Are you ready? Let's go. Okay, first of all, I'm really excited that I called something right. I called a couple things right. I predicted $10.23 billion in automotive revenue. It was $10.2 billion. I saw other people who I consider to be Tesla experts who said 9.8 billion, whatever. I called it about as close as you could get it, 10.2 billion in automotive revenue. And then you go down to total revenue. I said it could reach $12 billion in total revenue, and it's 11.96 billion. I nailed that about as close as you could. Very pleased that I'm going to brag. I got something right. Now that's not the most. I thought that was going to be the most exciting number that we were going to see. It's not the most exciting number we're going to see in this report. The most exciting number that blew everyone away was this number here, earnings per share non-GAAP. This is the Wall Street number. Wall Street estimates were around 90 to 95 cents a share. The biggest, I thought $1 a share. Rob Maurer thought $1.07 a share. I think I saw a couple of Tesla bulls saying $1.10 a share. $1.45 a share. This is a massive, massive, what they call beat. This is huge, huge, huge result. Tesla massively outperformed on earnings per share, which translates to price earnings ratio, which I'm going to talk about in a minute. Another big number, EBITDA jumped more like $600 million, $2.5 billion in EBITDA. This is a measure of profit. Big, big jump. Great report. Tesla did absolutely fantastic. All kinds of great numbers. CapEx, down here, CapEx is up. It's the highest CapEx. That's the amount of money they're investing in building more factories. They're spending more money to build more factories, to produce more cars, to produce more batteries, produce more energy storage. Great stuff. Everything is looking fantastic. This is about the best. This earnings report is better than I thought it could be. And I'm like a huge Tesla bull. This was a kill. They killed. And I want to talk about this number here. This $1.45 a share. If you took that 4 quarters in a row, in other words, Tesla does not grow anymore, you're basically looking at close to $5 a share. I think it's actually more than $5 a share for 2021. This number is very likely to grow. I think we might see $6 a share for Tesla in 2021. Before this report, Tesla was trading around $650 a share. It had dropped close to $600 a share. If it's got $6 earnings, that makes the price earnings ratio effectively 100, which is insanely low for a company that's growing this fast. Amazon is trading, 70, 80 price earnings ratio. Tesla's growing much, much faster than Amazon. Tesla is much, much earlier in its growth curve than Amazon. A price earnings ratio should be much, much higher than 100. So Tesla is going to the moon. This is going to be insane. This is a big if, okay? If Wall Street gets it, a big if the big money gets it, if the supposedly smart money gets it, Tesla should shoot up on Tuesday. Should shoot up $800 a share or higher. I don't think that's going to happen. A lot of my friends who I was talking to about this earlier, they don't think it's going to happen. But this is absolutely insane performance. And anyone can look at this and say, wait a minute, their cost structure is getting better over time. Their revenue is going up over time. This number is going to grow. And you're going to see probably $6 a share in 2021 for the calendar year 2021 or fiscal year 2021. And then 2022, $12 a share, $15 a share. It could hit $20 a share in 2022. And today's valuation is going to look absolutely insane. And anybody who's got a lot of money and any level of smarts can look at this number and say, oh my God, I see it now. If you've been holding back, if you weren't sure, you didn't get it before. Now, let's be clear. This is not financial advice. I'm not a financial advisor. You got to do your own due diligence, all blah, 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 blah. I can't tell you what markets are going to do. I am telling you from any sane way of looking at the company, Tesla is worth a heck of a lot more than $650 a share. It's worth more than $800 a share. It's worth more than $1,000 a share. I literally went and scraped money together to buy 3 shares when the stock dropped to 625. I just, and I'm like, all right, maybe I should take a home equity loan on my house to buy more stock. This is insanely low valuation. So my personal opinion, not professional advice is, oh my God, anybody who's got a big pile of money should be piling into Tesla stock, and the stock should shoot up now. Wall Street doesn't work that way. No guarantees. Certainly a high likelihood that Tesla's still going to drag along and not going to go up that much. But I don't know how anybody on Wall Street who uses, this is the number, this number here, this $1.45 a share, this earnings per share is the number they supposedly fixate on. And they were saying 90, 95 cents a share, and it beat by like 50. It wasn't up like a few cents a share more. Usually a beat is like you beat it by a few cents. They clobbered the estimates. This is the kind of thing that should send the stock to the moon. Who knows how Wall Street thinks, but it should go up. If it doesn't go up, my God, I mean, I'm going to be scraping to try to find money to buy the stock. Really quick on this page of the earnings report, I just wanted to point out that Tesla achieved all this while facing massive challenges and additional supply chain costs, which we're going to talk about later. Lower regulatory credit revenue. This is the Tesla Q cry, as Tesla's only making money because of regulatory credits. Regulatory credits went down, profits went up. Bitcoin related impairment, Tesla, quote, lost money on Bitcoin, even though they didn't really lose money on Bitcoin. It was a small amount, really had a trivial effect, and none of that got in the way. We're going to talk a lot about the supply chain costs coming up. Okay, big numbers I want to talk about in this page here. We've already kind of covered vehicle deliveries. That was something we already knew. 201,000 vehicles delivered, not a big deal. Solar deployed did not increase. It's pretty steady around 90 megawatts of solar, so that has not been a big jump. But you can see here a big jump in storage deployed, not as high as Q4, but much higher than Q1. So we're seeing overall a big increase in storage deployment. This is predominantly Megapack, I think, but also Powerwall is supposedly growing. We're going to hear more about that later. A little bit of growth in store and service locations, a little bit of growth in mobile service fleet. We do see a big growth in the number of supercharger stations and a pretty big growth in supercharger connectors. We're going to talk about superchargers later in this too from the investor call. A lot to cover on this page as well. A big thing that I've been focused on is this chart above my head with installed annual capacity. Not a lot of changes in this chart. I'm a little surprised. California annual capacity has not changed on this chart. It's a little surprising, but not yet. Shanghai changed from 450,000 to greater than 450,000. That's the only meaningful change on here. Cybertruck is still listed as in development. I thought that might go to construction. Tesla Semi, I thought would be located and go into development. We're going to see somewhere in here later, I don't know if I have it on here, that it appears they pushed Semi back to 2022. The decision was made that there's so much need for 4680 cells for the Texas and Berlin Model Ys that Semi got pushed back again into 2022. So Semi is not happening yet. That's a big change, but that's what we see on that part of this page. Couple details here about the US. We see that the majority of Model 3 and Y production was delivered in North America. This is because, as we're going to see, that Shanghai has become the source of exports. So we're no longer, mostly not exporting vehicles from Fremont anymore, except probably Model S and X at some point. So North American production is staying in North America. That lowers the cost of the vehicles to Tesla because they don't have to put them on a ship. They don't have to transport them somewhere far away. So that allows them to make more money on that. We also see Gigafactory Texas continue to progress with commissioning having begun in some areas of the factory. They're making progress in getting Giga Texas up and running to produce Model Y. We're going to talk about Cybertruck as well, but later. In Shanghai, things are going well. They've introduced a standard range version. Due to strong U.S. demand and global average cost optimization, they've completed the transmission of Gigafactory Shanghai as the primary vehicle export hub, which means basically vehicles going to Europe are coming from Shanghai, not from Fremont. And that means that the U.S. factory serves the U.S. and Shanghai serves Asia and Europe and wherever else. Of course, Giga Berlin's going to come online, and that's going to make things even better. And that's covered down here. We're seeing good progress. There's installing equipment. They've begun testing tools. They're making progress. So everything is looking good all over the world, and there's more to come. We're going to talk about more of this from the investor call. There's a lot on this page, but I just want to focus on battery and powertrain, and we can see that we are nearing the end of manufacturing validation at Cato, which is the factory in Fremont where they've started making 4680 cells. Field quality and yield are at viable levels. That's what it says right here. Field quality and yield are at viable levels. That means they are making cells that can be used in cars. And our focus now is on improving the 10% of manufacturing process that currently bottleneck production output. We're going to talk about that more in the investor call. They're making progress. And also, they've done internal crash testing of the structural pack architecture with single piece front casting, with single piece front casting, and that's been successful. So this is all great stuff. 4680 is going well, structural pack is going well. Not out of the woods, there's still some issues, but they're making progress. And again, we're going to talk about more about this from the investor call. Stay with me. This is another page in the earnings report. We believe we remain on track to build our first Model Y vehicles in Berlin and Austin in 2021. Great news. All sorts of issues, lots of potential problems, but they're making progress. And we have shifted the launch of the semi-truck to 2022, making progress on the industrialization of Cybertruck, which is currently planned for Austin production subsequent to Model Y. What does that mean? We're going to hear more about that. Stay with me. Okay, so now we're going to listen to some clips from the investor call. I'm going to try to put everything together so you can hear and see what's happening, what's important, and what we learned. There's a lot here. So I'm going to try to spell it out and show you what's happening, what's exciting. I'm honestly, I'm like super excited. This is absolutely fantastic news. Everything is going great. This is one of the best days. If you are a Tesla investor, if you are a Tesla fan, this is one of the best days we have ever seen. So I'm going to go through some clips from the investor call. Here's a clip where Elon talks about chip constraints. The supply of computer chips has been a huge problem for Tesla. Listen to what Elon has to say about this.
Regarding supply chain, while we're making cars at full speed, the global chip shortage situation remains quite serious. For the rest of this year, our growth rate will be determined by the slowest part in our supply chain, which there are a wide range of chips that are at various times the slowest part in the supply chain.
I have often talked about, and Elon and others have talked about Tesla as being battery constrained. This is the first time in Tesla's history, as far as I know, that Tesla has been constrained by something else. The supply chain has been so difficult, particularly getting chips for different areas of production, that they've actually been held back by chips rather than by batteries. It's amazing that this has happened. Long run, batteries are still the fundamental constraint, but for the next 6 months, year, who knows, it's going to be about chips. There's a lot more to it. Listen to this.
In fact, even achieving the output that we did achieve was only due to an immense effort from people within Tesla who were able to substitute alternative chips and then write the firmware in a matter of weeks. It's not just a matter of swapping out a chip. You also have to rewrite the software. Incredibly intense effort of finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production.
This is an absolutely amazing detail, that Tesla faced this huge challenge of not being able to get chips. They were able to go out and find substitute chips, but they needed to rewrite software, rewrite firmware, make it work. No other company in the world could have pulled off what Tesla did. And this happened with multiple chip shortages, that they have software people and hardware people who are able to make this type of thing work. This is amazing execution. This is above and beyond what any other company can do. Anybody taking a look at this should say, oh my God, because we've seen other car companies say, oh, we can't make cars. We don't have the chips. Tesla said, no, we got to make the cars. Let's find a way around it. And they found ways to work around it and make it work. And this is a sign of spectacular execution, spectacular talent at Tesla, a great team of people who are able to get things done, which means they're able to produce more cars, make more money, serve more customers, and basically become the clear leaders in the automotive industry and beyond, the clear number one company of the future. Tesla's amazing. This was an absolutely spectacular hit. Elon talked briefly about production of Model Y in Texas and Berlin. Listen to this.
We expect to be producing new design of the Model Y in both factories in limited production later this year.
There's a lot more about Model Y here for Berlin and Texas, including backup plans.
The Model Ys in Texas and made in Texas and Berlin will look very much like the Model Ys we currently make, but there are substantial improvements in the difficulty of manufacturing. So, for example, the Model Y made here and in Berlin will have a cast front body and a cast rear body, whereas the one in California has a cast rear body but not a cast front body. We're also aiming to do a structural pack with 4680s cells, which is a mass reduction and a cost reduction.
So a couple things there. First of all, we already knew this, but Fremont Model Y has a rear casting but no front casting. Texas and Berlin Model Ys have rear casting, front casting, and structural battery pack. And going to 4680 structural pack means both a cost saving and a mass saving, meaning the vehicle mass weighs less, which has all kinds of great benefits. And it costs less to make because structural pack costs less to make than the typical pack. But there's more about the backup.
But we're not counting on that as the only way to make things work. We have sort of a backup plan with a non-structural pack, 2170s essentially. But at scale production, we obviously want to be using 4680s and structural pack. From a physics standpoint, this is the best architecture, and from an economic standpoint, it is the lowest cost way to go.
They have a backup plan where they'll be able to use 2170 cells, which is the cell they use right now in Fremont and Shanghai, Model Y and Model 3. They'll be able to use those cells for Model Y in Texas and Berlin if necessary. But long run, the plan will be to shift to 4680 cells because that will allow them to scale production. So short run, we may see some 2170 based Model Ys coming out of Texas and Berlin. Maybe, maybe not, depending on how well 4680 and structural pack go. It's a short-term thing. Long run is 4680 structural pack, and it's all going to be great. Just a little bit more here about the benefit of 4680.
From a physics standpoint, this is the best architecture, and from an economic standpoint, it is the lowest cost way to go. So the lightest, lowest cost. But there's a lot of new technology there, so it is difficult to predict with precision when does it work and when do you reach scale production.
Are you ready for Cybertruck?
The Cybertruck is currently in its alpha stages. We finished the basic engineering architecture of the vehicle. With the Cybertruck, we're redefining how the vehicle is to be made. As Elon said, it carries much of the structural pack and large casting designs of the Model Y being built in Berlin and Austin. Obviously, those take priority over the Cybertruck, but we are moving into the beta phases of Cybertruck later this year, and we'll be looking to ramp that in production in Giga, Texas after Model Y is up and going.
So that was Lars Moravi, who's the Vice President of Vehicle Engineering. The key detail there, Cybertruck has basically finished so-called alpha stage. It's going into beta stage. And the plan is that Cybertruck will go into production after Model Y goes into production. For some reason, Model Y is prioritized over Cybertruck. I'm not sure why, but okay, Model Y is prioritized over Cybertruck. He didn't say how long after Model Y. Is it just that Model Y has to start before they go into Cybertruck? Does Model Y have to reach a certain point before they go into Cybertruck? It sounds like Model Y will start production, not necessarily deliveries, but production, probably late third quarter, early fourth quarter. I've definitely seen a lot of information indicating they're making a lot of progress on Model Y in Texas. So does that mean Cybertruck's production starts towards the end of this year? Does it start early next year? We don't know. Does it get pushed later? We just don't know how long it's going to get pushed back. But it sounds like there is a team that is making progress on Cybertruck. It doesn't sound like Model Y is holding them back as much as that Model Y is getting more attention. But Cybertruck is coming. There's an open debate. Does that mean Cybertruck starts here 6 months later? We don't know. I, of course, am waiting on a Cybertruck order, so I want it to be sooner. But it's going to be when it's going to be. But I was very optimistic about what I heard there. They finished this so-called alpha stage. They're getting ready to start the beta stage. How soon will they get to the point of being able to start building it? We'll see. Sounds like good progress to me. There was a bit more on Cybertruck, so listen to this.
I think Cybertruck ramp will be difficult because it's such a new architecture. I mean, it's going to be a great product. It might, I think, be our best product ever. There's a lot of fundamentally new design ideas in Cybertruck. Nobody's ever really made a car like this before, a vehicle like this before. So there'll probably be challenges because there's so much unexplored territory.
So not a lot of substance there. There's a lot more substance from Lars before, but they're working on it. There's a lot of challenges with Cybertruck. Maybe there's some engineering people who are busy with Model Y who will shift over to Cybertruck once they achieve what they need with Model Y. I'm very optimistic. I'm always optimistic, but we'll see how long it takes to get Cybertruck up and running. Should be at least early next year that they get up and running. So now let's get into batteries.
But we are looking at a pretty massive increase in cell availability next year.
A pretty massive increase in cell availability next year. I like the sound of that.
But it's not like in January 1. It ramps up through the course of next year. Even without Tesla cell production, we believe our suppliers will be able to deliver about twice as much cell output in next year as this year. Drew, do you want to talk more about that?
Yeah. Given concerns over cells bottlenecking growth, our target is to grow cell supply ahead of the 50% year-on-year growth targets of the vehicle business and also enable increased energy storage deployments.
Yeah.
Our cell suppliers are tracking to double their production in 2022.
Now remember, in the Q1 call, Drew said more than double. Now he's saying double. Elon is saying massive increase. I think they may have shifted from more than double to sandbagging as only double. I think they're really looking for more than double. That's my opinion. We'll see. And of course, you add the 4680 cells in, but let's keep going.
It's worth noting, like, if you have a target of a certain number, that doesn't mean it happens like as sure as nightfall is day. It's a target. If there is some calamity in the world that interrupts the supply chain, then it will be less. Contracts that we have with cell suppliers call for roughly a doubling of cell supply to Tesla in 2022.
Roughly doubling. Roughly doubling. Are they walking back from more than doubling, or are they sandbagging? I don't know. Sounds good to me. I'm happy either way. I like what I'm hearing. There's a lot of battery stuff in the investor call. Here's some more.
What we're thinking of doing is basically overshooting on cell supply for vehicles, and then as we have, say, excess cell supply in 1 month or another, then routing that cell output to the Megapack and Powerwall.
Overshooting on battery cell supply, getting as much batteries as they can in, and if they can't use them all for vehicles, they shift whatever excess they have into battery storage. Seems like a reasonable plan to me. Listen some more.
Well, by the same token, if we're prioritizing vehicle production, if there's a shortage of cell output for some reason, then we will throttle down Megapack and Powerwall production. So that something's got to give, basically.
Or if there's a disruption to vehicle production,
yes,
we have an outlet for the cell capacity.
Yes.
It sounds to me like they're not planning to double vehicle production. They're planning to double cell supply. So when I said before, I thought they were going to hit 2 million vehicles in 2022. It sounds like, no, maybe we're going to get to 1.6 or 1.7 million vehicles, or we're going to have extra cells available for energy storage. That's how I'm hearing that. But if there's a disruption to vehicle production, as Drew just said, then they can shift more cells into energy storage, and maybe they can just scale up energy storage production. Maybe that's something that's easier to do. Not really clear. I'm guessing that they've been ready to scale up energy storage production. They just don't have the cells for it. They prioritize vehicles because they make more money on vehicles, but that's where it's going. So I might walk back my 2 million vehicles for 2022 based on that statement right there. I'm not sure I'm quite ready to do it yet, but we'll see.
There's a tremendous amount of inertia in the supply chain. So if we say to a supplier, we want you to double cell output, well, even doing that in a year is very difficult. And then that system has a tremendous amount of momentum. It is like a flotilla of supertankers.
I love these metaphors. A flotilla of supertankers. They basically have ships full of batteries coming from CATL in China, sending lithium iron phosphate cells over, or from LG Chem in Korea, sending nickel-based cells over. They're just pumping battery cells wherever their supplies are going. They've got shiploads and shiploads of batteries they're moving. A flotilla. I just love that metaphor.
It's insane.
Speaking of which, from a raw materials perspective, we also have long-term contracts to secure our supply chain to also enable this growth. So we're not just looking at the suppliers, but upstream from there.
Yeah.
Which is more flotillas.
More flotillas. They got raw material flotillas, and they got battery flotillas.
Yeah, exactly. Things will move as fast as the slowest part of the entire supply chain, which goes all the way back to, raw materials, lithium and nickel and that kind of thing.
Yes, there's even more about cells, and there's more coming. This part is about the balance between iron and nickel. This is something I've talked about before. I think I nailed this before. Listen to what Elon says.
There is a long-term shift more in the direction of iron-based lithium-ion cells rather than over nickel. As the energy density of sort of iron, or what's called typically iron phosphate, but you might as well just call it iron. The phosphate is not taken for granted. But iron-based cells, lithium-ion cells, and nickel-based lithium-ion cells, I think probably we'll see a shift. My guess is probably to 2/3 iron, 1/3 nickel, or something on that order.
I have said before, I think in the long run, it goes to 80% lithium iron phosphate cells or iron-based cells. Right now, Elon's saying 2/3. Of course, Elon knows more than I do. I still think I could be right. It could head that way.
This is actually good because there's plenty of iron in the world. There's an insane amount of iron. But there's much less nickel, and there's way less cobalt. It is good for relieving the long-term scaling to move to iron-based cells mostly. And I think long-term, possibly there's a good chance that all stationary storage, that is Powerwall and Megapack, move to iron.
Now, this is something I have said before, that I thought Powerwall would go to iron-based cells instead of nickel-based cells. The Battery Day presentation, they put Powerwall in the nickel-based category, or the nickel-manganese-based category, because Powerwalls don't move, because the mass and volume aren't that important. It makes more sense because you're able to lower the cost of Powerwall, and you're able to use more nickel for vehicles where mass and volume matter more. So I called that before. It looks like it's heading that way, and that will, in the long run, allow for lower pricing for Powerwall. Powerwalls become very expensive, so we're going to see Powerwalls coming down in the price in the long run, and there's a lot more good stuff with Powerwall coming. Now, this is a little bit here that you could read a lot into if you want to.
So then nickel would be for really for long-range road transport, ships and aircraft and that kind of thing.
What you might be thinking there is, did Elon just say that Tesla will be making ships and aircraft? Some people are going to say that's what he's saying. I don't think that's what he's saying, but it could be that the long-term vision of Tesla is to make ships and aircraft as well. Or maybe Elon just thinks nickel will ultimately be useful for ships and aircraft, and somebody else will make them. I don't know. He said before they're not going to make aircraft. He's never said anything about ships one way or the other, whether they would make them or not. It's potentially interesting, but let's keep going. We are going to come back to 4680 later in the investor call. I moved a little bit of it ahead. We're going to come back to it. Right now, let's talk about superchargers. I thought this was a particularly interesting part of the call. Just a little background on superchargers. Just a few days ago, I think Elon said that Tesla was going to open up the supercharger network to EVs from other companies. He hadn't gotten more into it than that. Somebody asked him a question about it, so listen to what Elon had to say about that. There's a fair bit here, so listen.
Currently thinking it's a real simple thing where you just download the Tesla app and you go to a supercharger and you just indicate which stall you're in. So you plug in your car, even if it's not a Tesla, and then you just access the app and say, turn on the stall that I'm in for how much electricity. And this should basically work with almost any manufacturer's cars.
Now, I think this is interesting because, number one, if you own another company's EV and you want to use a Tesla supercharger station, you have to have the Tesla app on your phone. And when you get to so it's like you can own a Ford Mustang Mach-E or a Volkswagen ID4 or whatever other vehicle, but if you want to use the Tesla superchargers, which is the most common and the best supercharger station out there, you are exposing yourself to all this Tesla branding. And how many EV owners are going to get to, they're going to get the Tesla app. They'll say, wow, this is better than the app that goes with my car. And they're going to get to the supercharger station and say, wow, this is better than the charging stations that are normal for my vehicles, Why the heck do I own this other car? I should get a Tesla. It's really kind of an interesting situation, and there's more.
There will be a time constraint. So if the charge rate is super slow, then somebody will be charged more, because the biggest constraint at the superchargers is time. How occupied is the stall, and we'll also be smarter with how we charge for electricity at the superchargers. So rush hour charging will be more expensive than off hours charging, because there are times when the superchargers are empty and times when they're jam-packed. And so it makes sense to have some time-based discrimination on it.
Yeah, we've been doing that, and it's been working, and people respond, and it helps with utilization.
Yeah.
Key detail there, it may be that if you have a crappy EV from another company and it doesn't charge as fast, that you will have to pay more per kilowatt hour for the charge because your vehicle's too slow at charging. Tesla vehicles generally charge faster. And there's this challenge with Tesla when they're charging at supercharger stations, that you don't want a slow charging vehicle hogging a supercharger. So the solution to that is to charge people based on the time that they use the supercharger rather than the electricity that they're using, or some combination. And maybe that encourages people with slowly charging vehicles to go to lower power superchargers or charge somewhere else. And it makes them operate more efficiently. There's more on superchargers coming.
I think it's also important to comment that increasing the utilization of the network actually reduces our costs, which allows us to lower charging prices for all customers, makes the network more profitable.
Make the network more profitable. Tesla is going to make a profit on the supercharger stations. This is an important detail. Hard to say how much profit they could make, but imagine any car company that owns 30,000 gas pumps. How much money do you make on that? How do they figure out how to make money on that? A lot of potential there, really interesting. Drew's got more.
Profitable allows us to grow the network faster, so it's a good thing there. And no matter what, we're going to continue to aggressively expand the network capacity, increasing charging speeds, improving the trip planning tools to protect against site congestion using dynamic pricing, as Elon mentioned.
Yeah.
And just continue to focus on minimum wait time for all customers.
Yeah. Obviously, in order for this for the supercharger to be useful to other car companies, cars, we need to grow the network faster than we're growing vehicle output, which is not easy. We're growing vehicle output at a hell of a rate. So superchargers need to grow faster than vehicle output. So this is a lot of work for the supercharger team, but it is only useful in the grand scheme of things. It's only useful to the public if we're able to grow faster than Tesla vehicle output.
So that's important. So superchargers have been growing, but they need to grow faster. Because if Tesla vehicles are going to double, if their production is going to double, then they need to really, really increase the number of superchargers. They have a new factory that's scaling in Shanghai that's going to be producing 10,000 superchargers a year. They're probably going to scale production of superchargers in Buffalo. Maybe they're going to start producing them somewhere else. It's not clear, but there's a very clear plan on Tesla's part that we're going to grow superchargers faster, and that's cool. I'm excited to hear that. Now, there's a funny bit here where Elon made fun of a certain other company. Listen close.
Our goal is to support the advent of sustainable energy. It is not to create a walled garden and use that to bludgeon our competitors, which is sometimes used by some companies.
So if you didn't catch that, he's making this reference to Tesla could have the supercharger network and only allow Teslas to use it, and that would be an advantage for Tesla. And what Tesla plans to do is open it up, not make it a walled garden, allow other companies to use Tesla's supercharger network, even though that may reduce Tesla's competitive advantage, because Tesla's goal isn't to just make money on cars, it's to accelerate the transition to sustainable energy. And then cough, cough, Apple. That Apple is known for using its market power and some of the way it sets up its hardware and software to make it difficult for other companies to compete. We personally, my family, we switched to Apple iPhones because we were unable to use messaging. Text messaging wasn't working with our friends who had Apples. A lot of our friends had Apple phones. Works better when we have an Apple phone, and that people put up with it, but that's the way it is. So Apple abuses that power. Tesla is committed to not abusing that power. So a nice thing. Don't be evil, right? And there was kind of a big surprise in this earnings call that I didn't see coming. I don't think anybody else saw coming. It came out of a question about whether Elon would do an interview with somebody in the Tesla YouTube community, specifically Rob Maurer and Dave Lee were mentioned. Some other people thought it should be me, but whatever. But in response to that, after saying maybe, this is what Elon said.
I wouldn't say the last time I'll do earnings calls, but this is I will no longer be default to doing earnings calls. Obviously, I'll do the annual shareholder meeting, but I think going forward, I will most likely not be on earnings calls unless there's something really important that I need to say.
That was a bombshell for those of us, like I'm like a totally addicted to these earnings calls. And one of the things I love about the earnings calls is every once in a while Elon says something like, cough, cough, Apple. It is very unusual for CEOs, from what I understand, I don't listen to other earnings calls. From what I hear, it is very unusual for CEOs to be on such earning calls. So it makes sense for Elon to not be on the earnings calls. I'm personally excited about this because I love hearing from Zach Kirkhorn and Drew Baglino and Lars. There's other people on the Tesla team who have interesting things to say. So I'm excited that they will get a platform to say more, that this will also show the public that Tesla has a solid team, that it's not just Elon. I think Drew Baglino I'm like the world's biggest Drew Baglino fan. I think it's a small club. Maybe his wife, maybe some other people, but I think Drew is amazing. I think that Franz von Holzhausen's amazing. I love Martin Viecha. There's a lot of great people on the Tesla team, and I think it's great that we'll get to hear from more of them, and it shows the strong bench. People have these fears, the Elon risk. What happens if something happens to Elon? Tesla has a great team. I think it's a great opportunity for us to hear more from them, but it was still quite a surprise to hear this. Elon may still appear on some earnings calls. Maybe he won't be able to resist being on earnings calls. We'll see how that goes going forward. But very, very interesting to see that. Okay, so we're going to dive back into batteries and specifically into 4680 batteries. There's a lot of content here. And we got one more thing after 4680 that's going to blow your mind. But let's go listen to this.
Not to get too much into the weeds of things, but right now we have a challenge with basically what's called calendaring, or basically squashing the cathode material to a particular height. So it just goes through these rollers and gets squashed like pizza dough, basically, but very hard pizza dough. It's denting the calendar rolls. This is not something that happened when the calendar rolls were smaller, but it is happening when the calendar rolls are bigger. So just like we're like, okay, weren't expecting that.
Yeah. It's not a science problem. It's an engineering problem. It's not a question of if, it's a question of when. And the team is 100% focused on resolving these limiting processes as quickly as possible.
Exactly.
They're building these cells at the 4680 batteries. Thank you to Fred Jessup for providing the 3D printed 4680 mock-up. Building the cells at Fremont, and their original lines involved smaller machinery. But to scale production, they're going to need larger machinery. And when they started using larger machines, all of a sudden this particular part of the process didn't work well with the equipment and the larger machines, and they have to figure out how to make that work. Drew is confident they're going to figure that out. Don't sweat it. We'll get there. It's going to take a little time. It's just engineering work. It's not a fundamental physics or science problem. They'll figure it out. And there's plenty more.
On the reliability side, as Elon mentioned, we have successfully validated performance and the lifetime durability of the 4680 cells produced at Cato. And we're continuing ongoing verification of that reliability. We're actually accruing over 1 million equivalent miles on our cells that we produce every month.
1 million miles. The 4680 cell is a 1,000,000-mile battery. The 4680 cell is a 1,000,000-mile battery. They talked about it before. They didn't really talk about the 1,000,000-mile battery at Battery Day. And you heard Drew saying that they validated the quality at 1,000,000 miles. Really good progress there. And keep going. We're still in the first bit of this. Keep going.
In our testing activities, the focus on that is very clear. We want high-quality cells for all of our customers. And yeah, we're just focused on the unlucky limiting steps in the facility, and with the engineers focused on those few steps remaining, we're going to break through as fast as possible.
There's parts of the process of making the cells that are going smoothly, and there's parts that aren't. And as I understand it from what I've heard, and maybe it's going to come up here soon, 90% of what they're doing to get the cells made is going great. and there's just 10% that they need to do a lot of engineering work to hammer out the problems and get it working better. That's where they are.
Meantime, we have a massive amount of equipment on order and arriving for the high volume cell production in Austin and Berlin.
The equipment for cell production for Austin and Berlin, for Texas and Berlin, has already been ordered, a massive amount of equipment for large-scale cell production. They are on course to produce 4680 cells at large scale, and there's more of this coming. They're on course to produce 4680 cells in large-scale production in both Berlin and Texas coming soon. Big news.
But obviously, given what we've learned with the pilot plant, which is in Fremont, which is really quite a big plant by most standards, we will have to modify a bunch of that equipment. It won't be able to start immediately. But it seems like, Drew, correct me if I'm wrong, but we think most likely we will hit an annualized rate of 100 gigawatt hours a year sometime next year.
We will hit an annualized rate of 100 gigawatt hours of battery cell production sometime next year. They're going to back off on that in a second. They're going to back it off to by the end of the year. But the initial thing Elon said, and keep in mind it's Elon time, Elon is pushing to see if they can get to 100 gigawatt hours annual. That doesn't mean they will produce 100 gigawatt hours during the year 2022. It means that by the end of 2022, they will be at a rate of 100 gigawatt hours a year, which means 2023, they will produce more than 100 gigawatt hours of battery cells. We're probably talking about 30 to 50 gigawatt hours of 4680 cell production from Tesla in 2022.
We'll have all the equipment installed
Yeah.
to accomplish 100 gigawatt hours, and it's possible
Yeah.
that by the end of the year, we will be at an annualized rate of 100 gigawatt hours by the end of the year.
More likely than not, about 50% of reaching 100 gigawatt hours a year by the end of next year on an annualized rate, something like that.
Yep.
You can hear the push back and forth. Elon is pushing for, he wants 100 gigawatt hours of annualized production sometime next year. And Drew is saying it's possible we'll get to 100 gigawatt hours by the end of 2022. So a little back and forth there. Drew is probably more realistic than Elon here, so let's not get ahead of ourselves, but you never know.
But it could shift by a little bit. So
Yeah.
But it's nothing, as Drew mentioned, it's nothing fundamental.
No.
Just a lot of work.
Yeah, and even to the large roller question, Elon, right? Like on the anode side, the large rollers work great, no concerns. And so we're just learning as we go. And the nice thing about having that facility, on the fast track like we had it, and we talked about it at Battery Day, was really de-risking the big factories here. That's what we've done, and we've learned a lot. And with each successive iteration, the ramp up and the equipment installation will be faster and more seamless.
Yeah.
So basically what Drew is saying there is because they built the factory or the test factory pilot lines at Cato Road in Fremont, working there helped them figure out what they're going to need to do on the larger scale production lines in Berlin and Texas. This has been really important learning that's given them a leg up. So when they install the equipment at Berlin and Texas, they're going to have to make some modifications, but they're ahead of the game. They'll be able to scale up quicker than if they hadn't done the pilot line at Cato Road. Really promising sign. Now we're on to the second bit on the 4680 cells.
In the facility at Cato, over 90% of the processes have demonstrated rate there, but we are limited by the unlucky few that have not, and that's what we're working on. One of them that Elon mentioned was running the full-scale cathode calendar. We're working through some improvements that we need to make to that equipment and to the actual raw material itself to not have those limitations. But again, it's an engineering problem. It's not a question of if, it's a question of when. On the mixing side, we haven't actually really had any challenges specific to your question. And fundamentally, we're still happy with the dry process direction in terms of the factory footprint, complexity, utility consumption, space, and overall complexity simplification.
There's been a lot of concern that dry battery electrode process that they developed from Maxwell, that's a key feature that's going to help them make 4680 in less space with less capital expenditure, lower cost, a lot of advantages. So Drew is saying that part is going well. He doesn't see that as being a significant problem. It may not be as important as we think. Listen to this.
Don't have overemphasize dry cathode. I mean, I don't know, maybe it's like 10 or 15% of the cost improvement or something like that. I don't know, 20% maybe over wet.
Yeah, 10, closer to 10.
Yeah, so it's like, just like people don't think like this is like the Messiah or something. Wet versus dry reduces, dry is like 10% less cost than wet. So it's not, not 10%, still nothing to sneeze at, especially if you're making, hundreds of gigawatt hours a year. But it's not the Messiah, basically.
So first of all, hundreds of gigawatt hours of batteries a year. They're still planning to scale up production beyond 2022, 2023 and beyond, and scale up to not just 100 gigawatt hours of battery cells, but hundreds of gigawatt hours of battery cells. The dry battery electrode is something they talked a lot about at Battery Day as a big thing that was going to reduce cost. But on the whole, yes, it's a cost saving compared to the wet electrode method, but it's not that big of a deal. There's a whole bunch of other things they talked about at Battery Day that improve cost structure, made 4680 cells better. That's just one of them. Still, saving 10% cost when you're building hundreds of gigawatt hours of cells, it matters. So that's a nice little detail there. So we're almost to the end of the investor call. A little bit more about 4680 and related topics, and then we got one last thing. Let's keep going.
Yeah, we are in fact working with our existing suppliers to produce 4680 format cells.
Key detail here, 4680 cells will also be produced by suppliers. I talked to a key figure at Tesla when I was at the Plaid event, and I was told that the suppliers are about 2 years behind Tesla. So Tesla is pretty close to production of 4680 cells now. So I don't expect to see suppliers providing 4680 cells to Tesla until 2023. Maybe it'll happen faster than that, but that's my gut hunch based on what I heard.
This is just a guess right now, but I see us sort of like consolidating around a 4680 nickel-based structural pack and for long-range vehicles, and then not necessarily a 4680 format, but some other format for iron-based cells.
That's an important detail. Elon is saying we're going to go to nickel-based cells in the 4680 format, and we're going to go to iron-based cells in some other format. I had thought that they might do lithium iron phosphate in 4680 cell format as well. As far as I understand it, lithium iron phosphate cells that Tesla uses now are what's called prismatic format, which is like a rectangular box rather than a cylindrical cell. Here's a cylindrical cell. You can imagine like a fairly large box. That's the way that lithium iron phosphate is currently made by CATL for Tesla. He didn't say what format they would use for lithium iron phosphate. My impression is that the prismatic format is not good for structural packs, so maybe they've got some idea for some other type of format that will work for structural pack. Maybe it's a different cylindrical size that's not 4680 size, or maybe they can make a structural pack with prismatic, or maybe they won't need to use structural pack for everything. We'll see.
We right now we kind of have the Baskin-Robbins of batteries situation, where we have so many formats and so many chemistries that it's like we've got like 36 flavors of battery at this point. This results in an engineering drag coefficient where each variant of cell chemistry and format requires a certain amount of engineering to maintain it and troubleshoot. It inhibits our forward progress. So it is going to be important to consolidate to just maybe ideally 2 form factors, maybe 3, but ideally 2, and then just one nickel chemistry and one iron chemistry.
Now that's interesting. 1 nickel chemistry and 1 iron chemistry. Battery Day, there were 2 nickel chemistries. There was the high nickel chemistry and the nickel manganese chemistry. So is Tesla shifting course to say we're just going to do high nickel chemistry, or is it going to be nickel manganese chemistry? That was an interesting little detail there. So, 4680 is pretty clearly one of the formats. Maybe it's prismatic as the other format. And in the 4680, will there be 2 nickel chemistries or 1? This is a new thing. Maybe they're going to push for just high nickel. At Battery Day, they said, you get really almost as much out of nickel manganese as you get out of high nickel, and it costs less and you're able to spread the nickel over more cells. So maybe they're going to push towards a nickel manganese chemistry that's going to be common. Very interesting little detail there. And maybe there's certain uses like roadster and semi where it's really that important to use the high nickel chemistry. Kind of an interesting point there. I was surprised that he went there. We'll see how that plays out going forward. That could be pretty consequential in a lot of different ways. But let's keep going.
Yeah, and towards that end, we are engaging with the suppliers that we've had good partnerships with on 4680 designs to enable that simplification. And so far so good. They're working on, they're bringing their core competencies to bear on that. We're not mandating like what's going on inside.
And we do expect to see significant increases in supply from our existing suppliers, in addition to the cells that Tesla is making. So it's both. Sometimes I get questions from our cell suppliers of like, are we just gonna make all the cells ourselves? And then we're like, no, please make as many as you possibly can and supply them to us. We have a significant unmet demand in stationary storage. Megapack is basically sold out through the end of next year, I believe.
Yeah.
We have a massive backlog in Powerwall demand. The demand of Powerwall versus production is an insane mismatch.
So Megapack sold out till the end of next year. Next year, 2022. We've talked about Model Y has been sold out through Q3 of this year. There's so much demand for Megapack. There's so much demand for Powerwall that the more cells Tesla can get, the more of those products they can make. It appears they can make as many as they can get cells for. So that's really good news for Tesla Energy. Tesla Energy revenue will grow. I don't think I mentioned it in the financial documents when I was talking about it earlier, but Q1 other revenue was 15% of automotive revenue. This quarter, Q2, other revenue was 17%. It grew faster than automotive revenue. And if energy revenue is able to grow a lot, that's going to be another boost to Tesla long term, even though I think energy revenue might be less profitable, might have lower margins than vehicles. Still, more revenue, more growth, all good sign.
We use a lot of the same chips in the Powerwall as we do in the car. So it's like, which one do you want to make, cars or Powerwalls? So we need to make cars, so therefore Powerwall production has been reduced.
So first of all, I didn't know that. They use some of the same chips in the cars that they use in Powerwall. That was a little bit of a surprise. Maybe that relates to battery management because you have to manage the batteries in both of them. Powerwall and the cars both use nickel-based chemistries, so there may be something to that. And they clearly said they prioritize cars over Powerwall because cars are higher profit margin.
But as that semiconductor shortage is alleviated, then we can massively ramp up Powerwall production. I think we have a chance of hitting an annualized rate of 1 million units of Powerwall next year, maybe, sort of on the order of 20,000 a week. But again, dependent on cell supply and semiconductors. But in terms of demand, I think there's probably demand for in excess of 1 million Powerwalls per year.
Okay, so a Powerwall they sell for roughly $10,000. So if you sell 1 million Powerwalls and you sell them for $10,000 a piece, that's $10 billion a year in revenue. Tesla's revenue in 2020 was like 30 billion. Now, I think this year they're going to hit like over 50 billion, maybe 55 billion. But 10 billion is a big, big addition. Now, 2022, when he's talking about, or maybe it's 2023 that he's talking about, Tesla's revenue, I think, is going to pop up to 120 to 150 billion. So that 10 billion isn't quite as significant, but it still helps move the needle a little bit, doesn't it? That's pretty good stuff. So very excited to see growth in Powerwall, a lot of potential, 1 million a year. Now, maybe the price comes down as they scale, but this is great news.
Just a vast amount of megapacks for utilities. As the world transitions to a sustainable energy production, solar and wind are intermittent and by their nature really need battery packs in order to provide a steady flow of electricity. And when you look at all the utilities in the world, this is a vast amount of batteries that are needed. That's why, long term, we really think, to sort of combine Tesla and suppliers need to produce at least 1,000 gigawatt hours a year, and maybe 2,000 gigawatt hours a year.
Megapack, huge volume potential there, huge revenue potential there. Megapack, like I've talked before in my battery revenue model, that we're seeing about $500 or $600 per kilowatt hour in revenue for Tesla. Megapack is lower. Megapack is like $300 or $400 a kilowatt hour. So the revenue per kilowatt hour is lower with Megapack. But if you shift to lithium iron phosphate, you're lowering costs. If they produce them at scale, you're lowering costs. So it may be that ultimately margins go up on Megapack and you're still able to make a really good profit on Megapack and volume. We'll see. I'm still not persuaded on the story of how Megapack makes money, but it's really more about the mission of accelerating the transition to sustainable energy, maybe, and maybe it goes along with solar installations or something. That's an interesting detail. Now, I saved the best for last. Robotaxi, really interesting bit here. I love this. Listen to this.
Full self-driving is the main thing. Things are obviously headed towards, fully autonomous electric vehicle future. And I think Tesla is well positioned and frankly is the leader objectively in both of those arenas, electrification and autonomy. It's always tempting to try to find analogies, but with other companies or whatever. But really, the value of a fully electric autonomous fleet is insanely gigantic. Boggles the mind, really. So that will be one of the most valuable things that is ever done in the history of civilization.
One of the most valuable things that has ever been done in the history of civilization. So this is Elon saying, because I have my models about where I think Tesla stock is going and Tesla's valuation is going. And one of my models is, what if Tesla builds a fleet of autonomous vehicles for itself, which is what Elon just said. And what's the value creation there? One of the most valuable things ever created in the history of civilization. And I see, a fleet of 100 million vehicles making $10,000, $20,000 a year in profit each, heading Tesla towards potentially a $100 trillion valuation or $100,000 a share. And I know it's crazy. But that's what he just said. That's what he just said. It's there. So that's it for the investor call. I'm totally stoked. I probably will not sleep tonight. I'm just so wound up by how amazing the investor call was, how amazing the earnings report was. So much good news. So if Wall Street catches a clue, we're going to see the stock go up significantly on Tuesday and the rest of the week as they start to figure out what just happened. This is amazing, amazing stuff. This is just absolutely spectacular. And there was all kinds of gold in that earnings call. And Elon is saying unequivocally, Tesla is clearly the leader in autonomous driving. It's coming soon, and they're going to make an amazing amount of money. And no one on Wall Street is pricing that in yet. So I don't get to give investment advice. You got to make your own decisions. I'm just telling you my opinion. Tesla stock is going to go crazy shortly over the next couple of years and beyond, and out to 2026 and 2030. We're just going to see insane valuations for Tesla, insane share prices. I am totally stoked. I'm going to sell sometimes I think I'm just going to sell my car, mortgage my house to buy more Tesla stock. It's crazy. It's just absolutely stunning, wonderful news. Very, very excited. I hope you liked it. If you like this video, please check out my other videos. Support the channel on Patreon. Check out the t-shirts at elonbits.com and the stainless steel water bottle. And thank you so much for watching.